It is March 2024. We're going to review February's numbers. Danny was good enough to review again. And on initial view, Danny, I'm surprised. What do you got?
Yeah, so last month was February. We came in higher than the year before, certainly higher than January of this year. You see we're up 19% month over month and 5% year over year. So definitely a good sign there. This is the time of year where things tend to rebound after the winter slowdown. People start thinking about selling in the spring, and things start heating up. That's where we landed. 1,571 houses were sold in the greater Columbus area. And currently we only have a little over 1,700 houses that are active. And that puts us at just over 1.1 months of supply. So not a ton of supply. And actually that's less supply than we had in both January of this year and December. So again, kind of supply constrained is where we find ourselves as we get into March.
Yeah, so that's surprising. Those are way higher numbers than expected, even over this time last year. I think a big part of it had to do with we hit almost 6.5% interest rates at some point, and that's a digestible number for most people. However, we are not full throttle with the seller's market. There's still on the donut graph, if that's a good way to say it, 10% of houses sold for over 5% above. And that's a little less than we have seen in the past, at least.
Yeah, so that big blue section is anything plus or minus 5%. That's kind of just close to asking, right? It's when things get 5% below or 5% over that's really interesting. And those tend to be the things that trade over the course of the year. Generally, as things heat up and there's more competition in the market, that's when we start to see people really going above asking. We're not at that point in the year right now. We do look better than things looked in January. 10% of homes that were sold in February went 5% or more above the asking price, and that's up from just 7% in January. So again, things are starting to open up a little bit here and maybe reflect that there's a little more demand for, again, not a ton of supply right now.
Yeah. And then the following days on the market chart follows the trend of the donut chart, which would be a little bit higher days on the market. If you're higher days on the market, you're going to be less likely to sell for way over asking. These two go together. What's interesting is that's a different metric than the sales volume and sales price average. So it's nice to see that that difference there, even though it's topping out at what is that saying? 34 days on the market on average.
Right. Yeah, that's the average. The median was down to 10. And look, you go all the way back to this time last year, very similar. We kind of went up. Things peaked around 33 days. That's about where we are now at 34. And then they started to come back down as people kind of got back into the buying mode. Things really do slow down during the holidays. These graphs really show that. And that's what we're seeing here. These longer days on market, keep in mind, there's not as much demand. That means that things are just sitting longer for the supply that's out there. I mean, that's pretty obvious. So when you're seeing this home sell in January or February, they may have already been out there for 30 days, 60 days. So yeah, I'd expect that this is going to continue to pick up into March and into the spring.
Yeah, and then another big change is the price reductions, and that's fallen quite a lot over the previous month. That's maybe the earlier indicator that the market's starting to turn more towards the seller's market when things are not reducing. They don't have a need to. So,
yep, absolutely. If there's more competition, there's more offers for a place, less need to actually reduce the price, and that's again a thing that we've seen historically. We're expecting that that's going to go down, down, down as we get into the summer months. And one thing that we should talk about too is the list price versus the actual sales price. This is another one where we're starting to see these lines start to converge again. And again, we've talked about like when you have that level of competition in the market for limited supply, that's when people really get into bidding wars and have to go above asking price. And that's what you see typically in the summer months that are busier. And then, of course, as things slow down, you get less competition for every house that's out there. And that's where you actually see that those lines crossed over for the winter, right? So that orange line is the sold price. You can see for the last handful of months as things cooled down, that was going below the list price. But if you look at February, it started to tick back upward. Those lines are coming closer together. Average sales price of $359,000. One of the really big notable here is that's up $19,000 over the previous year, right? Over the February of 23. That's big, right? So despite all the macroeconomic kind of turmoil over the last year with rates and all the rest of it, houses selling now, 19,000. That's over 5.5% more than what they were selling for last year on average. So very interesting to see how the market's reacting to us coming down from the 7% to the 6s versus us going up to the 6s last year at this time from the 3s and the 4s and the 5s.
Yeah, that's a big number. And that average sales price, it's seasonally adjusted, but that is consistently up 5%. Not surprised. That sounds about right from what we're seeing. I guess the message is it's a great time to own a house. And if you're looking to get into the market, the sooner the better. And I don't see an end in sight for this, at least in the Central Ohio market. We're just going to get busier as rates come down. So
the one other big thing that we should talk about is the interest rates. I know we touched on it before, but let's show the graph. Things were down below 7% over the last couple of months. There's a lot of chatter still about the Fed reducing rates, cutting rates maybe a few times in 2024. A lot of people don't expect that to happen until later in the year. But still, you can see here that when we pulled the numbers just before recording, getting things together for this month, we were just a tick below 7%, which is not that far off from where we were this time last year at 6.65. So yeah, that'll be an item to watch for us, and we'll come back again in a month's time, and we'll look at what happened for March.
So we should break this down further. Let's do a breakdown. Ready? Your buyers.
Okay, I'm buyers.
Oh, okay. All data is pointing to we're heating back up again. We're getting to the busy season. And what this means for sellers is it's time to gear up, potentially get more offers, less contingencies. It's going to be easier to sell your house for more money in the upcoming months. For buyers, Danny, give me the take on the buyer side.
Yeah, on the buyer side, it's going to get more competitive. And what that has meant over the last couple of years as things really started to heat up is you're getting multiple bids for the homes that you're interested in. You may have to actually be prepared to pay above the asking price, as we saw in some of the charts there. That's pretty common. You may have to waive some contingencies or relax those, right? You may still have an inspection, but not ask for remedies, right? So those types of things are going to start to happen more and more as things heat up into the summertime. That's the expectation. So now is kind of your moment. Get out there before things really get crazy competitive. If you see something you like, make an offer, lock it down. What we've seen is our market continues to grow. To Rob's point earlier, if you have a house that you own, as that tide rises, your boat rises, you're capturing that value in terms of the equity in your home and the overall value. So getting into something is great. Now's a great time to do it before things are totally crazy again.
That's a great take on it. If you want to think about how people regard a seller's market versus a buyer's market, everyone's super happy in the seller's market. It's the craziest thing, but buyers win houses. Okay. Sellers sold for the highest. There's a bidding war for their house. They're very happy about that. Obviously, when a buyer gets into contract, paying so much more over, tens of thousands over, they're very happy because they won. Everybody's happy in the seller's market. They're willing to waive appraisals. They're willing to waive inspections. Everybody wins. In a buyer's market, where the deals are there to be had, the buyers always wonder if they could have gotten a little bit less, if they could have paid less for a house, why this closing costs are so much, why this interest rate is so much. And sellers obviously are not happy with the results they get. because we base our pricing on comparable property values. So when the market's falling, that's a hard thing to follow the market down because you don't know how fast it's going to go. And it just sucks for everybody. So buyer's market, nobody's happy. Seller's market, everybody's happy. And we're gearing up towards a very heavy seller's market this summer, and we'll have to see what happens.
Yeah, that's a great point. And I mean, I think if you've been paying attention, I mean, we've been pulling these numbers for a while now. I mean, this is the same pattern year in and year out. Things cool down in the winter, they heat up in the spring and the summer. That has an impact on price, obviously an impact on the level of competition. But even though things come back down and cool off in the winter, they're still higher than the year before. And that was higher than the year before that. And that was higher than the year before that. That's what we're seeing. So word to the wise, if you can get in now at a great price, you see historically what they've done, the distance between February at 340,000 to almost 400,000 at the peak in summer of last year. That's a big spread. So yeah, if you can get in now as a buyer, great time. You could be walking into equity within just a few months.
That's right. That's a great point. Yeah. A few months is a really good safety cushion for people because it costs to sell, right? And everybody worries about that a little bit. What if I don't stay in Columbus? What if I take another job? It doesn't take years like it used to. It's not 5-year spread like it used to be. It's a year, maybe. And depending on how hot this market heats up, we'll have to see. But I expect this to go, I expect sales pricing to go a lot higher as interest rates fall. And everybody expects interest rates to fall. So keep that in mind. Best time to buy a house was 20 years ago. Next best time to buy a house is right now.